Welcome back to our intermediate financial accounting class. Over the last few segments, we've been building a statement of cash flows. We started out talking about the conceptual basis for cash flows, why it's important, how we do it, what FASB wants out of it, and then we started walking through step by step how to build an actual formal statement of cash flows, moving away from the simplified baby version that we've done in the past to the real methods that are used by companies. Again, still a simplified version compared to what's out there for a real publicly traded company, but a lot more advanced and a lot more detailed than what we've seen in the past. And of course, a lot more fun because of the T accounts and journal entries that we got to do. Through this process, we have done almost all of the steps. We've certainly done most of the work. All that's left now is to wrap it up. You see, we've already created a check figure. We've already built worksheets. We've filled out those worksheets with the effects of specialized transactions, non-cash items in the income statement, and balance sheet effects to make sure that everything that affects cash flow has been somehow incorporated into our three worksheets, one for operations, one for investing, and one for financing. Now that we've got everything together, it's time to finish up the worksheets so that we can build our statement of cash flows. So step 6 is to complete the worksheets, and then in step 7, we'll make sure that the worksheets pull together to give us the value that we need as our check figure. So let's jump right into cash flow from operations. This is the first of our worksheets, and it's the one that we need to go through the first because it takes, I won't say the most work, but the most, well, I guess most most effort. There's more involved here because there's multiple things we're doing. But the key, remember, to the cash flow from operations worksheet is the basic equation. We're going to take the accrual numbers plus these changing cash numbers that we've so carefully gathered over these last 3 steps, and that's going to give us our cash flow information. So let's start right here. We took our sales number and took out bad debt expense because we knew that didn't have anything to do with what we were paid because people aren't paying us for that part, or at least we don't think they will. And then we calculated this change in accounts receivable net. So let's take the accrual number plus the change, and that's going to give us our cash received from customers. So our accruals say that our revenues were 6.6 million. After we adjust for the people who are never going to pay us, cash actually came in of $6.5 million. Of course, some of them are people who will never pay us. Some of them are people who just haven't paid us yet, but that's our actual cash coming in from our customers. For the equity method, and I know we did this in the past, but I deleted it so we could do it again. This is our cash received from equity securities. It's the dividend. We showed an earnings number of 150, but we only got dividends of 29. So this conversion took us from the accrual that we showed because of our portion of their net income to what they actually gave us in cash. The gain goes away because I show the actual cash flow down in investing activities below. Interest, dividend, and revenues, there's no change there, which means that the accrual is the same as the cash flow. So cash received from interest and dividends is $15,000. Next is our cost of goods sold, and I have 2 adjustments for cost of goods sold. And just to make sure I don't mess things up, I always sum up adjustments and do one summary number. So I'm going to use the auto sum feature here. So these changes will have a net effect on my cost of goods sold of $5,000. I'm going to take the 3.49 plus that 5,000, and my cash paid for inventory will be a little bit higher than the cost of goods sold. It dropped because of inventory because I used up inventory on my shelves instead of buying more, but I also had to pay my suppliers for a bunch of stuff I bought in the last period I didn't ever pay them for. Let's see, salaries and wages. Cash paid for salaries, a little bit more than the expense because I paid some of what I owed them from last year. Cash paid for pensions, and if we were to go back to our step 3 notes, we would see that we actually contributed 18,000. I showed 24,000 as the expense, and we figured out a $6,000 adjustment that would get me from the 24,000 to the 18,000 because I know that's what I paid into the pension, and that's what I wanted there. Let's see, other expenses are a little bit lower. Then we have in our accruals, cash paid for operating expenses. The next set all go to 0 because they're depreciation, which has no cash effect, amortization, no cash effect, amortization of my present value on my ARO, also no cash effect. Interest expense has 2 adjustments. I'm going to add them up. Now I have to be careful here to make sure I get the right ones. There we go. So a net $87,000 change. I'll take interest expense plus that $87,000. And because of all the interest payable that accrued, I actually paid out a lot less than I thought I was going to have to, or than I accrued as interest expense, because a lot of it will be paid in future periods. Let's see. Loss on sale of PP&E goes away because I have the actual cash from the sale down below in investing. Income taxes have multiple adjustments, so we'll account for those. And get cash paid for taxes. There's actually a lot of different ways you can do cash flow from operations. I use this way because it's what I teach in Intermediate Part 1, and because it's what makes the most sense to me, and because it makes the different methods of doing the statement of cash flows so easy. You see, if I had up all of these cash effects, I get cash flow from operating activities. That's my cash flow number. I'm going to mark that in blue. And these line items give me a direct style statement of cash flows. That's what I would show in my direct style. Cash received from customers, cash received from equity securities, cash received from interest, cash paid, etc. That's a direct style. But the worksheet's not done. The worksheet also provides us with the indirect style. You see, if I start with net income and I put in these changes, not these net amounts that I calculated, that gives me the indirect style. And I'm going to do the equation right here. Net income plus the sum. And I have to be careful. I put those sums in, and they make it easier for me to get to the direct style, but they do mess up the indirect style just a little bit. But look at that. There's that same number. So whether I do it with the actual cash flow values, or I do it with these changes and other specific effects, I get to the same number. So what we see here in red, that's direct style. What you see here in orange, that's indirect. This one worksheet not only allows you to organize and keep track of everything as you go through steps 3, 4, and 5, but it also provides you with all the information you need to do both styles of cash flows. Isn't that cool? I love this. One method lets you take care of both styles, and you don't have to do anything special. That's awesome. At least I think it's awesome. Now that we've done our operating activities, we can go ahead and take a look at our other 2 worksheets. Now, the other 2 worksheets don't take this kind of work. There's no special equation. I've already got specific line items with specific cash amounts. I just have to sum them up. So if I scroll down, I can easily finish these 2 worksheets with just summing up what's there. So my net cash flows from investing activities will be 3.206. And my cash flow from financing activities will be $1,535,000. And that's all there is to finishing up these 2 worksheets. A little bit of work to get cash flow from operations, but the investing and financing activities, I'm just summing up the numbers I've already got. Step 7 is to go through and verify that if I sum up these 3 values for my 3 worksheets, that I get the check figure that I calculated in step 1. So I'm going to make a little worksheet here. We're going to call this step 7, and it's going to be cash flow from operations, cash flow from investing, and cash flow from financing. And it's going to give me my total change in cash. Let's see, this is calculating the sum of the worksheets. Okay, there we go. The only thing I need to fix here is the format looks awful, so I'm going to fix that. That it matches everything else we've done. And I'm going to make this look good too, just because I want it all to be beautiful. There we go. All right, now that I have this built and beautiful, now I can put it together. So I'm going to bring down the cash flow from operations number down here. I'm going to bring the cash flow from investing number over here. And I'm going to bring the cash flow from financing number over here. And now the moment of truth, I'm going to add these up, and I'm going to go back and make sure that it matches step 1. So when I sum these, I get negative 599,000. In step 1, I calculated my total net change in cash, and there it is. This number balances with that number, which means I have done my worksheets correctly. That's my check. And since I have my worksheets done and all the information gathered, and it balances with step 1, I can now finally go on to my very last step, building the statement of cash flows. And that's where we're headed next time. I'll see you then. Thanks.